today. Accounts, audit and auditors. Now, every company, every company, the every company, you remember the accounts definition we discussed earlier. What is the accounts definition you studied in 11th and 12th? Accounts is art and science. So what did we discuss? That the way you maintain your accounts, the way you might be maintaining your books of accounts might be different from anyone else maintaining their books of accounts. Correct? Now we need standardization. And how did the standardization come? Accounting standards under section 130 to 133 is giving you your accounting standards. Now, after accounting standards, what is happening? Every company that is maintaining accounts, if there is a particular transaction, no matter which company it is, the transaction will be recorded in the same way. Why? How does this help us? It creates uniformity and standardization in books of accounts. And now coming to Companies Act. Okay. Here in this accounts, audit and auditors, you remember Satyam scam that we discussed. Okay. What did I tell that time? That it was not possible for him to do this scam without auditors being involved. Okay. Now there were so many provisions in the Companies Act 1956 which were outdated and which were not serving the needs of today's economy. And that's how Satyam scam happened. Okay. And that's when one of the topic that has come into your Companies Act is rotation of auditors. So all these accounts and auditors is again one of the most important chapters if you think about it from your company's point of view. Why? All the scams that happens can be prevented by auditors. Okay. Always remember one thing. What do I always say? If there is any law, for a matter of fact, you can define what is the purpose of that law in one single line. Correct? Now, accounts and auditors, we will be dealing from section 128 to 148. Okay, accounts and auditors, both is covered under 128 to 148. Totally 11, so 21 sections are there. Clear? Now, these 21 sections are telling you if you are a company, how will you maintain your books of accounts? How will you get them approved? If there is an issue with the financial statements, how will you reopen your financial statements? And you will study about accounting standards. And how will you appoint auditors? The provisions relating to retirement of auditors, rotation of auditors, removal of auditors, everything with respect to books of accounts and auditors is covered in this chapter. Okay. Let's start. Now, first thing, let's go through three definitions. Books of accounts, financial statements, and financial year. Books of accounts, section 2, clause 13. Section 2, clause 13. Books of accounts includes inclusive or exclusive definition. Inclusive definition. Records maintained in respect of any sum of money that is received and expended by a company. So what are they saying? Any money that is received by company or that you are spending the money, nothing but your expenditure, and matters in relation to which receipts and expenditure takes place. Go through the first point. Okay. Any money that you have received, any money that you have spent, which is nothing but expended by a company, and matters relating to the money that you have received or you have spent. First point is done. Then all your sales and purchases of goods and services, your sales and purchases. Third one, assets and liabilities. Where is assets and liabilities generally mentioned? Balance sheet. Okay, this is nothing but your balance sheet. And then items of cost as may be prescribed under section 148 of the Act in the case of a company which belongs to any class of companies specified under. You remember, you guys know what is cost audit? Usually done in manufacturing companies. What is cost audit? Think about a manufacturing company. To understand its actual profitability and how well the company is earning money, how well it's doing its business, is some or the other way dependent upon cost. Okay. Now, all this process is done under cost audit. Only some companies are required to get their companies get cost audited done. Okay. Which companies? The ones mentioned under section 148. Generally, it is manufacturing companies, which that's the reason even your CMA course is there, US CMA or Indian CMA. Usually, they find their jobs in manufacturing companies. Okay. Go through these 4 points. Any sums of money received and expended, something that you have received or you have given. Okay. Second point, sales and purchases. Third, assets and liabilities, nothing but your balance sheet. Then items of cost as may be prescribed under section 148. Go through these four and remember. Done. Let's tell it once together. All the sums of money that is received or and expended by the company and matters in relation to then sales and purchases, assets and liabilities under section 148. Now financial statements, section 2, clause 40. Financial statement in relation to a company includes balance sheet as at the end of the financial year. Even this is an inclusive definition. Okay. So what is included? Balance sheet, profit and loss account, cash flow statement, statement of changes in equity, and an explanatory note annexed to or forming part of the your financial statement. Okay. First thing, balance sheet. Generally, you will have your assets and liabilities, your profit and loss account, or in case of company carrying on any activity not for profit, here you will call it as income and expenditure. We discussed this even in the previous classes. Section 8 companies do not have their P&L accounts. We call it income and expenditure. Even in yesterday's Malleshwaram class, we were discussing dividends. Where will you pay your dividends from? From your profits. And if we start calling in section 8 company also profit and loss account, you have some profit there. So then automatically, if that was the case, imagine that we are not calling it income and expenditure. We are calling it profit and loss. Whenever there is profit, only and only from profits we can pay our dividends. Clear? So now even section 8 company would be allowed to pay dividends. But what is the provision for section 8 company? It is prohibited to pay dividends. Why? Because there is no concept of profits in case of section 8 company. It's merely income and expenditure. Okay. And cash flow statement in the for the financial year, a statement of changes in the equity. Nothing but changes in your shareholding pattern. Okay, now you issue shares. Every year you will be issuing shares or you are buying back certain shares. Don't you think there will be change in the shareholding pattern? That will be part of your financial statements. Okay, what was in the previous financial year? What was this person's percentage of holding and how much is it this financial year? And any explanatory note annexed to or forming part of any document referred to in clause, subclause 1 to subclause 4. Go through these 5 points. Simple. Balance sheet, profit and loss account, cash flow statement, statement of changes in equity, and explanatory. No, go through these 5 points. Done. We'll tell it once. Start. Balance sheet. Explanatory note. Annexed to or forming part of any document referred to in subclass 1 to 4. Now coming to financial year. What is from when does your financial year start? April 1 to 31st of March in the following year. So now when did our financial year start? The current financial year? First April. Okay. Now let's read it. This is your financial year, but there is one case where you will take your financial year to be in a different way. Okay. Section 2, clause 41. This is section 2, clause 40, financial statements and financial year, alphabetical order 40 and 41. And what was the section number for books of accounts? 213. And your 212 is books and paper. We'll do that at the end. 212, 213, 240, and 241. In relation to any company, so what are they telling? According to 241 of the Act, financial year in relation to any company or body corporate. So this definition is applicable to other body corporates as well, not just for companies. Or body corporate means the period ending on 31st day of March every year. So when will the every financial year end? It will end on the 31st of March, and where it has been incorporated on or after 1st January of a year. Now here you will have the word year is used in two contexts. Whenever they are just saying year, we are talking about the calendar. We are talking about the calendar year. When is your calendar year? 1st January to 31st December. Your financial year will end on when? 31st of March. So automatically it will start from 1st of April. Is this clear? Okay. Now what are they telling? Now let's read it once again. According to 241 of the Act, financial year in relation to any company or body corporate means the period ending on 31st day of March every year, and where it has been incorporated on or after 1st January of a year. So they are talking about a calendar year. Now what is the current financial year? 2025 20. So it will start on 1st April 25 till 31st March 2026. Now let's say one company was incorporated on 10th January 2026. When will the financial year end? 31st March 2026, right? But here they have given, see, it's less than 3 months of time. It's less than 3 months before your financial year ends. It's less than 3 months of time. What are the provisions for your financial statements? We have seen that before also. Any financial statements that is audited, that is presented and given to the shareholders. And these financials are approved by the shareholders in your annual general meeting. Now, all that is not, it doesn't seem practical for a company that is just incorporated. So, what did companies have to do? It gave you a relaxation. If a company is incorporated on 1st January or after 1st January, the period ending on 31st day of March of the following year. Now, when is the following year now? 2027. So its financial year will start from 10th January 2026, 31st March, 31st March 2027. Okay. This is applicable only and only for those companies which are incorporated on or after 1st January. And this relaxation is only for the first financial year. Then from the second financial year, it will start from 1st April of 2027. Clear? So this is their first financial year. And the subsequent financial year will start from 2027 to 31st March 2028 as usual. Clear? In respect whereof financial statement of the company or body corporate is made up. Okay, just read from here till here first. So it is, what is general definition? What is the general rule for a financial year? It will end on 31st March of every single year. And the exception to this rule is where if the company is incorporated on or after 1st January. Okay. And that time when will the financial year end? 31st day of March of the following year. Yeah. Go through this. Clear? Go through all the three definitions. If you have any doubts, let me. Then I'll move ahead. If later you crack some joke with respect to that, no? Tell. Here. Tell me. So 15 months. The financial year will start from, so you will prepare your books of accounts for the first financial year will start from January 26 to 31st March 2027. So there you have more than 12 months. That's the reason only for the first financial year. From the subsequent financial years, it's 12 months itself. And even if your company is incorporated even on 31st December of 2025, you will not get this. It's only when you incorporate on 1st January or after. March. Till 31st March 2025, if you are incorporated, your financial year will end on 31st March of 2026. But let's say your company is incorporated on or after 1st January 2026, then your financial year will end on 31st March 2027. Okay. Now, let's say if there is a foreign company, if there is, let's say, Microsoft, it's coming and setting up its subsidiary in India. Should it follow Companies Act, the subsidiary? Subsidiary should follow Companies Act because it is a company, though it is a subsidiary company of Microsoft, but it is incorporated where? In India. So it has to comply with Companies Act 2013. Now tell me one thing. If there is an Indian company, let's say Tata Motors, and Tata Motors has one subsidiary in United States, for example. Okay. Now, don't you think that subsidiary should follow their company law? The same rule, right? So when you read the first proviso with me, provided that where a company or body corporate which is holding company or subsidiary company or associate company of a company that is incorporated outside India. Now, what are they telling? It is holding company, subsidiary company or associate company of which company? Which is incorporated outside India and is required to follow a different financial year. different financial year for consolidation of accounts outside India, the central government may, on an application made by that company or body corporate in such form and manner as may be prescribed. As may be prescribed means rules. Allow any period as its financial year, whether or not that period is a year. Okay. So what they mean to say is we are following from 1st April to 31st March. Now, Microsoft is having a subsidiary in India, but its holding company is where? It's in United States. So now, even we will see that there is a provision called as consolidation of accounts. What do you mean by consolidation of accounts? Let's say there's one holding company, there's subsidiary company, and you have an associate company. Okay. There's A Limited. A Limited's associate company is E Limited. Okay. And A Limited subsidiary is C Limited. And C Limited subsidiary is D Limited. Now, each and every company has to prepare its financial statements. But then you should prepare one more financial statement, which we call consolidated financial statement. Of all the subsidiaries, associate companies, holding companies, you will prepare one single financial statement. It is called as consolidated financial statement. We call this consolidation of accounts. Now, don't you think even that holding company which is in US has to do the same thing as per their law? Now they are telling, for example, their financial year starts from 1st May and ends on 30th April. Let's say it's ending on 30th April and it's starting on 1st May. Hypothetically, it's just an example. Now, the subsidiary company in India, which is Microsoft subsidiary in India, can make an application to central government taking permission that we will be following that financial year. We will not be following the definition given under section 2, clause 41. Clear? On an application made by that company or body corporate in such form and manner as may be prescribed, allow any period as its financial year, whether or not that period is a year. It can be, you can call it 6 months, 9 months. Generally, it's not like. But let's say hypothetically, someone is calling their financial year not to have completely their 12 months. Then what will you do? They are considering something else as a financial year, basically the accounting period. You can make an application to central government allowing you to follow that financial year. Is this clear? Then second proviso. Provided further that any application pending before tribunal as on the commencement of Companies Amendment Act 2019 shall be disposed by the tribunal in accordance with the provisions applicable before such commencement. Read this and explain. Let's say Companies Amendment Act 2019 commenced from this point of time. Okay. The Companies Amendment Act commenced from this point of time. During this period, if there is any application that is pending with in tribunal, which tribunal? National Company Law Tribunal. Now it is still pending and it is still ongoing, and the Companies Amendment Act has commenced. Now, which provision should it apply? It is saying that you should apply those provisions applicable to it before the commencement. So you will not be considering the amendments on or after the commencement of Companies Amendment Act 2019. Is this clear? So whatever was the provision during this period will be applicable even here. But let's say if a new application was filed at this point of time. At this point of time. Then will Companies Amendment Act be applicable? Of course, yes. Because the only condition here is that your application that you have filed with NCLT should be before the commencement of Companies Amendment Act of 2019. Clear? It will not. Come again? It does not have. No. It says that no, it does not have retrospective effect. Wait. No. No. Correct. She's right. There's no retrospective effect. See, retrospective means even if the application is filed here, but you are having all. Wait. So what are they saying? Once the application was filed before the commencement. Actually, here the question of retrospective will not come because the application was filed before the commencement of the Amendment Act. So there is no prospective effect. That would be a right state. No, wait. So what are they saying? The company's amendment. Okay. Now, Companies Amendment Act was commenced on this date. Let's call it 2nd November 2018. Just for a guess. Okay. 2nd November 2018. Now, if any application, let's say it was filed on 1st October 2018. Okay. And it is still continuing after 2nd November 2018. They are saying all the provisions till 2nd November 2018 will be applicable. What do you mean by retrospective effect? Even today, if let's say you're filing a form, even let's say you had filed a form long back, you had filed a form, let's say back in 2017. All the laws, even today, they will be applicable. Those amendments are applicable even today. You are taking the laws of backdated laws, even they are applicable as of today. Clear? But in this case, what is happening? Just have a look at it. Now you understood prospective. From today, it is applicable. Prospective means from today it is applicable. Retrospective means even the older laws are applicable. Now think about it. What do you mean by retrospective effect, science? What do you mean by? If you are saying there is no retrospective effect, correct, fine, but explain what do you mean by the older laws will not be applicable? Will not be applicable. Huh. But here the thing is, see, if they were telling that you have filed a form or anything, okay, you have filed a form on, let's say, on 2nd December 2018. You have filed a form on 2nd December. If they were saying that even the form that you have filed here, if the earlier laws are applicable, then it is having retrospective. But the Amendment Act does not have a retrospective. That is what the Amendment Act doesn't have a retrospective. So in simple words, anything that is any case that is any application that is filed after 2nd November 2018, it will the older laws be applicable? No. The Amendment Act 2019 will now be applicable. But if the application, now we are looking at the cause of action. If we are filing the 1st October 2018, the cause of action was of course before 2nd November 2018. Correct? It was before 2nd November 2018. So that's the reason when the cause of action was there, we are taking those laws, what was applicable back then. You understood? When was the cause of action? Let's say 1st October 2018. Whatever laws were there as on that date, that we are considering. But if you are filing application after 2nd November 2018, then the older laws are not applicable, then the Amendment Act is applicable. That's it. That's what I'm. No, the act. Exactly. So what she means to say is, if you have filed a case on 2nd December, wait. If the case is filed on 2nd December 2018, then is the older provisions applicable here? Okay. And this amendment act is applicable here. That's understood now. Exactly. That's a good example. Clear? Provided also that company or body corporate existing on the commencement of this act shall within a period of 2 years from such commencement align its financial year as per the provisions of this clause. Which clause are they talking about? Clause 41. Clause 41. So let's say you are a company incorporated at the time of the commencement of Companies Act 2013. You were already existing. That means you were either incorporated on under Companies Act 1956 or any other previous Companies Act. Now, in this case, how much time do you have? You have 2 years to align your financial statements with the definition given under Companies Act. That's it. And now it is outdated. Now, this provision is no longer applicable right now because 2020. Okay. Go through financial year definition. What? Hmm. Hey guys, wait 1 second. I can't hear. Huh? Where? Which? Are you talking about this? This one? No. The first one. Huh? What are you asking? Hey, you're talking about something else altogether. Or let's say this is Spotify. Spotify has an Indian subsidiary. Now there's a holding company outside India. Now the subsidiary, should it follow the Companies Act definition or the definition given in their home country? So there is a possibility that they might be following different financial year. What is the financial year for us? General rule is 1st April to 31st March of the following year. Clear? But let's say they were having different financial year. Now you as a subsidiary company of that holding company can make an application to central government requesting to allowing you to follow that financial year. That's it. Clear? Pakka? Not clear. Read that once again. Taxes. They you will compute, no? Hmm. Hmm. Huh? No, even here you will pay, no? Even here also you will pay. It's a resident, no? It's the end of the day, it's an Indian company. So tax will be computed. Basically, you will have different provisions of income tax for in this case, probably. Okay. Chinmay, tell, ask him. She used to be. Done. Place of keeping the books of accounts. Place of keeping the books of accounts. Section 128, 1 of the Act requires every company to prepare and keep the books of accounts and other relevant books and papers and financial statements at its registered office. Was the general rule? You have to maintain your books of accounts, books and papers, and your financial statements at your registered office. However, all or any of the books of accounts may be kept at such other place in India. So what is the one conclusion? If you are a company incorporated under Companies Act 2013, can I say that your registered office is in India? Yes. Okay. And they are saying that the general rule is that if you want, where you should maintain your books of accounts, where should you maintain? At the registered office. But you have an option to maintain your books of accounts even outside your registered office, but make sure it is in India. Okay. Kept at such other place in India as the board of directors may decide. When the board so decides, the company is required within 7 days of the decision to file with the ROC a notice in writing giving the full address of the other place. Such intimation is to be made in AOC file. Are they taking permission of ROC in this case? Yes or no? They're simply saying we are giving the notice to ROC. That was we are maintaining our books of accounts in any other place. If they have not filed AOC file, we can assume that ROC will assume that the books of accounts are maintained in its registered office. When it is filing AOC file, so the general rule is your books of accounts will be maintained in the registered office, but you can make an application to ROC to maintain books at any other place, but that other place should be in India. And how will you notify ROC? With form AOC 5. Okay, go through this. How many days? 7 days. Continue. Rule 3 of companies Accounts Rules 2014. Rule 3 of Companies Rules 2014 provides the manner in which books of accounts needs to be kept. The important provision with respect to maintenance of books of accounts in electronic form are given below. See, comparatively, this is less important when compared to Section 128. Okay, but we'll just go through this. The maintenance of books of accounts or other relevant papers in electronic mode is permitted. Such books of accounts or other relevant books and papers maintained in electronic mode shall remain accessible in India at all times so as to be usable for subsequent use. One, it should be accessible in India at all times and shall be usable for subsequent use. Go through that. First point. This definition you don't have to remember. What are they saying? You can maintain an electronic mode, but when you are maintaining an electronic mode, that should be accessible in India at all times and shall be usable for subsequent use. For financial year commencing on or after 1st April 2023, every company which uses accounting software for maintaining books of accounts shall use only such accounting software which has a feature of recording the audit trail. What is audit trail? Now I am having history of the complete transaction. Where did this particular money come from? In some softwares, you will have the feature of audit trail. Now, there is one. So, in insolvency, whenever any insolvency case gets admitted, the first thing we get done is forensic audit of the company. What is forensic audit? They are trying to identify those transactions which have red flags on them. Basically, suspicious transactions. Okay, let's say that they sold a particular piece of land. Where did they get this money from? Okay, then you will have different layers from where you will be getting money. Okay, basically the complete history of the transaction. Okay, that is your audit trail. So it becomes easier for the auditors to do these forensic audits. Okay, so if you are maintaining in electronic mode, you can use an accounting software. But if you are maintaining books of accounts on or after first day of April 2023, then you should have that accounting software which has the feature of recording audit trail of each and every transaction, creating creating an edit log of each change made in the books of accounts along with the date when such changes were made and ensuring that the audit trail cannot be disabled. The information contained in the record shall be retained completely in the format in which they were originally generated, sent, received, or in format which shall present accurately the information generated, sent, or received, and the information contained in electronic records. Just go through this. Just go through these points. It's pretty easy. So then recently after this Data Protection Act and all, now you are required to have your servers situated in India. Generally, that's the practice. If you're using cloud services, your books of accounts, the server should be maintained in India. Now, come to preservation of books of accounts. 424. The books of accounts of every company shall be kept in good order and a period not less than 8 years. So minimum 8 years. So the books of accounts should be preserved for minimum 8 financial years immediately preceding the financial year or where the company had been in existence for a period less than 8 years in respect of all the preceding years along with vouchers relevant to any entry. Clear? So if your company is incorporated, only it's been 4 years since your company is incorporated. Of course, you have to preserve your books of accounts for all the 4 financial years. But let's say your company is incorporated, it's been 10 years. The last immediately 8 preceding financial years, books of accounts has to be maintained. Okay. However, where an investigation has been ordered, then the central government may direct that the books of accounts may be kept for a longer period as it may deem for. Simple, minimum 8 years. You only during the case of investigation, central government may direct you to maintain your books of accounts for longer than 8 years. Vouchers for every transaction you made, your bills or anything, the basically your supporting document for the transaction. Okay, all that, even along with your books of accounts, you have to maintain that as well. No, but along with the vouchers, whether it is less than 8 years or it's been more than 8 years. Clear? What? 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 Persons responsible for maintaining the books, managing director, full-time director, CFO, any other person of a company charged by the board with the duty of complying with the provisions of section 128. Okay. MD, full-time director and chief financial officer or any other person of the company charged by the board. What was this? Yeah, turn it on me, nice. Then go through 128. See. Later I'll start 129, okay? You mark it. Okay. Oh my God. Hey, shut up. Doubt. 128 is books of accounts. 128 is books of accounts. 129 is financial statements. Definition of financial statements. Now 129 we are seeing how will you maintain your financial statements. Understand? Yes. Right? Hey, you can hear till the end, no? Because I couldn't hear you. Now financial statements. Hey, that is rule 3 of declaration of dividend rules. Those are different rules. In companies accounts rules, it's different. You understood, you don't have one single rule. Under Companies Act, you have multiple rules. Prospectus and allotment of securities rules. Then share capital and debenture rules. Then declaration of dividend rules. Now we are talking about accounts rules, companies accounts. That's why remembering rules is difficult. Section we are remembering. What is financial year definition section number? Head. Shameless person. Books of accounts? Hey, Where is F? Where is F and where is B? Huh. Hey, you turn this side. 216. Sure? 214, sure? Hey, you only told. 212 is your books and papers. Wait, let me complete. 212 is your books and papers. 213 is your books of accounts. 240 is 240. 240 is financial statements. 241 is, huh? Hey, you shut up. Okay? Everyone just keep quiet. 240 is financial statements. 241 is financial year. Okay? Huh. Okay. Clap. Financial statement. Financial statement shall give true and fair view. We will see what is true and fair view. Okay? So what are they saying? The financial statement shall give true and fair view of the state of affairs of the company or the companies, the form, the form as provided for the different class or classes in Schedule 3 and shall comply with the accounting standards notified under Section 133. However, insurance companies, you remember general law and special law? Which will prevail? Special law will prevail. Now, this is your provision, this is your general rules. Now, you have your banking companies regulated by Banking Regulation Act of 1949. Then companies engaged in generation and supply of electricity, insurance companies, IRDA Act. Okay, these are your special laws. If they are asking you to maintain your books of accounts in a different manner, you will have to follow those laws. If other than these laws, generally which law should you follow? Companies Act 2013. Now remember the basics. Let's say Kotak Mahindra Bank. It is incorporated under Companies Act, but regulated and has the license to do its business, banking business under Banking Regulation Act. So you will comply with Banking Regulation Act. You remember in the second chapter we discussed, until and unless there is no conflict, Companies Act also will be applicable. The moment there is a conflict between Companies Act and Banking Regulation Act will be applicable. Even here, the same thing will be applicable. Generally, 129 is applicable only to that extent that it does not conflict with its special laws, the laws which are regulating it. Okay. However, insurance companies, banking companies, companies engaged in generation of electricity and supply of electricity, any other class of company shall make financial statements in the form as has been specified in or under the act governing such class of companies. Clear? Financial statements shall be laid in the annual general meeting for that financial year. They are saying shall be laid. It is mandatory and this is one of your ordinary business. It is one of your ordinary business. Presenting your financial statements at your annual general meeting is one of your ordinary business. You remember I told there are 4 ordinary businesses. So this is one of the 4 ordinary businesses. Hmm. No, they don't follow. If they have in their own laws any other provision which is deviating from Companies Act, you will have to comply with that. If they have no such provisions, then you will have to comply with companies. But yes, banking companies have their own way of maintaining books of accounts. Does that get covered in Inter? Okay. Financial statement must give true and fair view. Financial statement must give true and fair view. What do you mean by true and fair view? True and fair view in respect of a financial statement means the financial statements are complying with accounting standards as notified under section 133. Second, financial statements shall be in such form provided in different class or classes of companies in Schedule 3. So Companies Act has different schedules. Okay, Schedule 1, Schedule 2, Schedule 3. You have multiple schedules. Schedule 3 is telling you how will you maintain your financial statements. It's giving you a format of the financial statements that you have to use. Clear? So they are saying that how will you give true and fair view? First point is your accounting standards. Second, your financial statement shall be in which form? The form mentioned under Schedule 3. In case of financial statement of insurance or banking or electricity company or to any other class of company for which a form of financial statement has been specified in or under the act governing such class of companies. For example, banking company. Which act is governing? Banking Regulation Act. Now, if Banking Regulation Act is giving a specified format, you have to comply with that. That's it. Read the third point. You should comply that statement which has been specified in or under the act governing such class of company shall not be treated as disclosing true and fair view. Just because they are complying with their own laws does not mean that they are going against true and fair view under Companies Act. I'll repeat it once again. Banking Regulation Act has given you one format. Companies Act has given you one format. You are a banking company. Which format will you apply? The one given under Banking Regulation Act. Now, just because you are using that, now what did we see under 129? Financial statement should give true and fair view. Just because you are using the format given under Banking Regulation Act does not mean that your company is not giving true and fair view. Clear? You are not following Schedule 3 of Companies Act, but you are following some other format given. But that does not amount to that you are not complying with Section 129. It is deemed that you are complying with Section 129. Clear? Even if you are using any other format, it is deemed that you are giving true and fair view of your financial statements. Clear? They have given the acts. In case of banking company, Banking Regulation Act, Electricity Act of 2003, and Insurance Act of 1938 or IRDA Act of 1999, where the financial statements of the company do not comply with the accounting standards referred to in 129.1. What accounting standards did we refer to in 129.1? The one, if you read 129.1, they are talking about accounting standards notified under 133. Exactly the same thing. Now tell me one thing, not related to your exam. Now just tell me, instead of saying refer to in 129.1, why can't they just say accounting standards specified under 133? You understood the question. See, what are they telling? Accounting standards referred to in 129.1. What were the accounting standards referred to in 129.1? The accounting standards specified under or notified under Section 133. My question is, instead of saying referred under 129 and we going back to 129 and going to 133, rather than that, they could have given here 133, no? Huh, agreed. So if you read 129.1, they are saying that accounting standards notified under 133. Now, my question is, when you are talking about accounting standards here, they are referring to those accounting standards which were referred to in 129.1. So, how are they telling? Basically, go to 129.1, see which accounting standards they have mentioned, which accounting standards, the one notified under 133, then you will go to 133. Instead of that, they can cut the chase and go to 133. Exactly. Tomorrow 133 might change. Accounting standards tomorrow might change to another section. Clear? But it will always be mentioned in 129. Let's say hypothetically that 133 accounting standards are now mentioned in section 450. Now that will change in 129, right? Anyways, that will change in 129. So that's the reason here again we don't have to amend. Again, we don't have to amend here saying that it is 145. When we say refer to in 129.1, we'll go to 129.1, whichever section that is there, no matter whether it is amended or not. Today it is 133, tomorrow it can be some other section number. Clear? That's the reason they mentioned the section number where we refer to it. Clear? At every annual general meeting of a company, the board of directors of the company shall lay before such meeting financial statements for the financial year. The same thing, whatever we studied, at every annual general meeting, you have to present your books of accounts and your financial statements. Okay. Now, who are the persons responsible for compliance? MD, whole-time director, CFO, or any other person charged by the board with the duty of complying with the requirements of 129. The same thing what we saw above for 128. Go through the penalty ones. What? Ask. Doubt or something else? What? You remember? Pakka. What's the tenure for individual auditor? Oh. Hmm. It's more or less like independent directors definition. You guys didn't have independent directors, so you only had part A. Huh? Done. What's the section number for holding company? Huh? What is 247 then? 287 is then two holding company. 47 issued capital. Okay, what's the section number for government company? 2 clause 45 is government company, 246 is holding company. Okay, and 287 is subsidiary company. 285, 286 subscribe capital. Perfect. 284 shares. 281 is securities. Consolidated financial statements. Consolidated financial statements. Companies Act 2013 has made preparation of consolidated accounts mandatory for all companies, including unlisted companies and private companies having one or more subsidiaries or associates or joint ventures. Okay, now it is mandatory to prepare consolidated accounts. According to Section 3 of 129 of the Companies Act 2013, where a company has one or more subsidiaries or associates, it shall, in addition to its financial statements. Now, there was A Limited. Okay. A Limited has subsidiary company called as B Limited. And A Limited's associate company is C Limited. Okay. Now, whenever A Limited is preparing its own financial statements, it has to prepare consolidated financial statements for its subsidiary associate company, and its own financial statements, all combined into one single financial statement. But does that mean B Limited does not have to make its financial statements? No. It has to make, even B Limited has to make its own financial statement as well as C Limited. Clear? According to subsection 3 of 129 of the Companies Act 2013, where a company has one or more subsidiaries or associates, it shall, in addition to its own financial statements for the financial year, prepare a consolidated financial statement of the company and all its subsidiary associates in the same form and the manner that of its own. The way it is preparing its own financial statements, even you should prepare the consolidated financial statements with applicable accounting standards, which shall be laid before the annual general meeting. The same thing. Simple. And now, companies shall also attach along with financial statements salient features of financial statements in form AOC 1. Till now, how many forms did we see? Two. What was the first form we saw? AOC 5. This is AOC 1. AOC 1 is salient features of your financial statements. AOC 5 comes when you're maintaining your books of accounts in any other place other than your registered office, but within India, you will notify ROC in AOC 5. Clear? 7 of it. Within 7 days. And now, manner of consolidation of accounts. Rule 6 of Companies Accounts Rules 2014. Consolidation of financial statements of the company shall be made in accordance with the provisions of Schedule 3 of the Act and the applicable accounting standards. The same thing. How should you consolidate? As per Schedule 3 and applicable accounting standards. Accounting standards under 133. Provided that in case of a company is covered under subsection 3 of 129 of the Act, which is not required to prepare consolidated financial statements under the accounting standard, it shall be sufficient if the company complies with provisions on the consolidated financial statements provided in Schedule 3 of the Act. Go through the first proviso. AOC 5. You're asking which form? Then clear? When accounting standards is asking you not to prepare financial statements, if you prepare your financial statements as per Schedule 3 of this Act, which is Companies Act, it is sufficient, provided further that nothing in this rule shall apply in respect of preparation of consolidated financial statements by a company if it meets the following condition. Now we are talking about nothing in this rule shall apply in respect to preparation of consolidated financial statement if a company is meeting the following conditions. When it is wholly owned subsidiary or partially owned subsidiary of another company and all its other members, including those not otherwise entitled to vote, have been intimated in writing and for which proof of delivery of such intimation is available with the company, that they do not object not presenting the consolidated financial statements. Basically, when there is a wholly owned subsidiary or partly owned subsidiary. Clear? And you have notified, read this, all other members, including those not otherwise entitled to vote. All the members who are not entitled to vote, preference shareholders, you are giving them intimation. What intimation? Having been intimated in writing and for which proof of delivery of such intimation is available, and they do not object that we are not preparing for consolidated financial statement. Let's say you guys are members in my company. I am telling you guys that I will not be preparing consolidated financial statements and I have given you intimation. How will I give you intimation? Generally by registered post, and I have a proof of delivery. Proof of delivery that my intimation has been delivered to you and you have not given any objections, then I am not required to comply with this rule. Clear? Then it is a company whose securities are not listed or are not in the process of listing on any stock exchange, whether in India or outside India, and its ultimate or any intermediate holding company files consolidated financial statements with the registrar, which are in compliance with the accounting standards. Read the third point. Its ultimate or any intermediary holding company. What do you mean by? Now, let's say there was another holding company for A Limited called as Z Limited. So the ultimate holding company for B Limited is Z Limited. Now read that. Its ultimate or intermediate holding company files consolidated financial statement with the registrar, which are in compliance with the accounting standards. Already A Limited has filed your consolidated financial statements. Even if you prepare, the same result will come. So there is no need to prepare for you to once your ultimate holding company or your intermediate holding company has prepared consolidated financial statement and it is filed with registrar, then you are not required to comply with this rule. Go through these three exceptions. Done. What was the first exception? So you have given intimation to all the members, including those who are not entitled to vote. Second, whose securities are not listed or are not in the process of getting listed, and its ultimate or intermediate holding company has filed the consolidated financial statements with the registrar. Then, and you have complied with accounting standards, then you are not required to prepare your consolidated financial statements. Clear? None. We'll take a break. Government may require such class or classes of unlisted companies. We are talking about unlisted companies as may be prescribed to prepare the financial results of the company on the periodical basis as may be prescribed. Okay. Obtain approval of board of directors and complete audit and the or limited review of such periodical financial results in such manner as may be prescribed. File a copy with the registrar within 30 days. Simple. Just go through this. It's only for unlisted companies. The central government will tell that which companies have to prepare financial results on the periodical basis. Go through these 3 points and you have to file it with the registrar within 30 days of the completion of relevant period. Let's say quarterly financial results has to be filed. April, May, June quarter is over. Immediately after the ending of the first quarter, within 30 days, you have to file it with the registrar, the periodical financial results. What? What are? So third point. Discuss later. Section 130. Reopening of the accounts on courts or tribunals order. Now, if at all the central government or SEBI or income tax authority feels that of one particular company's financial statements are not proper, basically the profits are inflated, the expenses are shown as more, or the basically it's not showing the true and fair view, and these financial statements have been presented to the shareholders in the annual general meeting. Everything is done. After that, central government is being suspicious about the financial results of one particular company. Now, what will you do? Now you can either the central government, income tax authority, SEBI, or any other statutory regulatory body can make an application to the registrar requesting them to reopen the books of accounts. Reopening the books of accounts. Section 130 of the Act provides for the provisions relating to reopening or recasting of the books of accounts of the company. It is providing for reopening or recasting of the books of accounts. A company shall not reopen its books of accounts and shall recast its finance statement unless an application to tribunal or court of competent jurisdiction in this regard is made by any one of the following: central government, income tax authority, SEBI, or any other statutory regulatory body. What do you mean by statutory regulatory body? Any other statutory regulatory body. Any regulatory body which is formed under a particular act. Okay. Now, for example, do you think based on this, can RBI go and file this application? Yes. Can RBI file? Yes, RBI Act 1934. It is incorporated under RBI Act of 1934. So RBI can go and make an application with the court or tribunal with a competent jurisdiction requesting them to allow reopening of the books of accounts. Okay. An order in this regard is made by the court of competent jurisdiction or tribunal. Go through the first point. So who can make an application? Central government, income tax authority, SEBI, any other statutory regulatory body or authority or person concerned. Okay. And an order in this regard is made by a court of competent jurisdiction or the tribunal. What do we mean by tribunal? NCL. Done? Okay. The reopening or recasting of financial statement is permitted only for the following reasons. It was prepared in fraudulent manner or the affairs of the company were mismanaged during the relevant period, casting the doubt on the reliability of the financial statement. So only for two reasons you can make an application. One, it was prepared in a fraudulent manner or the affairs of the company were mismanaged during the relevant period. Okay. The tribunal shall give a notice to central government, income tax authority, and SEBI. Now, let's say income tax authority has filed an application and it's a listed company. Don't you think SEBI should be notified before they give an order? Right? Because what if SEBI has some objections to reopening of books of accounts? Correct? So, a notice has to be given to central government, income tax authority, SEBI. Who should give this notice? The court or tribunal to whom we are making application. The account so revised or recast under this section shall be final. Central government, income tax authority, SEBI. Take this one. Everyone becomes photographer suddenly. Take. Hindu ಕಳಿಸ್ಬೇಕಾ? Write down. ಕಾಣಿಸ್ತಿಲ್ವಾ? ಕಳಿಸ್ತಾರೆ ಇರೋ. Wait. Clear? Simple? Okay. You have a doubt. Pakka. What did they? Huh. Any relevant party. If it's a listed company, of course, we have to give to SEBI. Now, if it's an unlisted company, is there any point giving to SEBI? No, that's it. So, whoever is the relevant party, we have to give them notice because once we are recasting and reopening the financial statements, if they have any objections, they can tell to the court that please do not open it, or they can say that yes, even we are suspecting that the affairs of the company were mismanaged. So, in those cases, they will reopen the books of account, basically giving a reasonable opportunity of being heard. Okay, done. Hmm. This point is important. No order shall be made under section 131 in respect of reopening of books of accounts relating to period earlier than 8 financial years immediately preceding the current financial year. Current financial year is when? 2025-26. So I cannot ask the tribunal to reopen the books of accounts before 8 immediately preceding financial years. Only up to immediately 8 preceding financial years, the books of accounts can be opened, but not before 8 years. Clear? Excluding the current financial year. Because current financial year, we are still not adopted. No, they're still, why current financial year is not included? Because current financial year is not yet audited. Even if it is audited, we still did not present it in the annual general meeting, right? So we are only talking about the audited financial statements during the 8 immediately preceding financial years. Clear? Understood? No. Which financial year are we in? 2025-26. Okay. You can see, right? So 8 immediately preceding financial years tell 24, 25, 23, 24. Now these are your 8 financial years. 1, 2, 3, 4, 5, 6, 7, 8. Okay. I can only reopen the books of accounts maximum of which financial year? 2017-18. Before 2017-18, those books of accounts cannot be opened. Clear? Is everyone clear with this? But we also saw one more provision. No? But if there is an investigation, the central government may direct the company to maintain longer than 8 hours, 8 years, sorry, longer than 8 years. Let's say it asks to maintain books of accounts for last 12 years. So I can reopen the last 12 preceding financial years books of accounts. The general rule is what? I have to maintain my books of accounts for minimum period of 8 immediately preceding financial years. Clear? Now, if the company, if the central government is asking the company to preserve it for 12 financial years. So for the immediately preceding 12 financial years, books of accounts can be reopened under section 130. 128 was books of accounts, 129 was financial statements, 129A was periodical financial statements, and 130 is reopening of books of accounts. Okay, go through the 130. Hmm. So, wait. Now, what is the general rule now? How many years should the company preserve the books of accounts? 8 immediately preceding financial years. Okay. So maximum I can reopen the books for maximum 8 immediately preceding financial years. So ninth preceding financial year would be there. No. In our example, that would be 2016-17. That I cannot reopen. 2015-16 I cannot reopen. 2016-17 I cannot reopen. Maximum I can reopen which financial year? 2018, 17-18 financial statement. Is this clear? Okay. Now, but let's say the central government directed this particular company to preserve its books of accounts of 2016-17 and also 15-16. Now, up to 2015-16 also, I can reopen my books of accounts, provided they had asked me to preserve it for longer duration. If they have not asked me to preserve it for a longer duration, maximum till 2017-18, financials can be reopened. Once those financials are reopened, all the other financials will also end up changing because your closing balance will change. Clear? I was telling, right, that insolvency case, I think for you guys haven't told. That insolvency case that I was telling, and that fellow has not filed financial statements from 2019. Did I tell in CMSL? I think I told that insolvency saloon. Huh. So he did not file. Okay. So what happened in one of the insolvency cases I was working on? I told. So from he incorporated his company on 2019. And from the time of incorporation, he has not filed single financial statements with ROC. We will see in 137 that you have to file your financial statements with ROC. And this boss hasn't done it. Okay. And now we had to file from 2019 to 2025. We ended up spending 20 to 30 lakhs. Just the CS fees, penalties for ROC, all that almost came up to 20 lakhs. So that's the cost of non-compliance. And he doesn't have money to pay that. You guys know this case. How many of you know about this? This case, who? I have told you guys. You guys haven't told. You told? No, CMSL. They did not attend CMS. Sir, if there is any investigation that has happened and the central government gave a direction after the investigation that you have to maintain it for longer than 8 years. The condition here is the investigation or something, so they would have some suspicion that okay, something is wrong with the company. So, clear? Hmm. They'll reopen, and if there are any changes, they will again make those changes and again present it like how the normal procedure for a normal financial statements. You will again adopt these in the age year. If there is any penalty, you will be paying that penalty as now. Voluntary revision of financial statements are board's report. Now the company itself wants to revise its financial statements. This is section 131. 131 of the Act allows the directors to prepare a revised financial statement or revised board's report. Financial statement section number? Books of accounts is 128. Financial statements is 129 or revised board's report. Board's report section number 134. In respect of any of the three preceding financial years. Here was the duration? 3 preceding financial years after obtaining the approval of tribunal. Guys, one second. After obtaining the approval of tribunal, if it appears to them that company's financial statement or board's report has not been complied with the requirements of 129 or 134. If you have not complied with 129 or 134 and you have and now there is a necessity that you want to revise your financial statements. Basically, some calculations were wrong or some entries were wrong. So you are revising your financial statement. So who is the applicant here? Here the applicant is the company itself. They are making an application to the tribunal that, sir, we want to revise our financial statements because they are not complying with 129 and 134. This can be done only for the financial statements of 3 preceding financial years. Clear? The tribunal shall give notice to the central government and income tax authorities and shall take into consideration the representations. Now I am revising my financial statements. Now I have to notify all the statutory departments. No. Now all my tax returns would be based on what? My financials. I am a listed company. I would have presented this to SEBI and stock exchanges. Now all these people should be notified if I'm changing my financials today, because so many shareholders would be there who would have invested in my company based upon my financials. Now let's say I have shown X amount of profit, and tomorrow, based on all the profit that I have shown, you felt that okay, this company is good and you have invested your money. Tomorrow I'm coming and telling that no, I want to revise my financial statements. So now there is a chance that the investors or the public might be at a disadvantageous position. Correct? So how will you prevent public from being in disadvantageous position? You will inform the regulators, income tax authorities, SEBI, central government, so that if they have any objections for revision, they will raise their objections. That's it. Clear? The tribunal shall give notice to central government, income tax authority and shall take into account the representations made by the central government and the income tax authority. Such revised financial statement or report shall be prepared or filed more than once in a financial year. This point is important. Shall not be prepared or filed more than once in a financial year. And the reasons for revision shall be disclosed in your board's report. Board of directors will be preparing their own report called as board's report under section 134. Now, if you have revised your financial statements, why did you do so? What were the reasons behind it? And if you are saying that some entries were not done properly, why were they not done properly and what is the effect of it? That has to be disclosed in the board's report under section 134, where copies of previous financial statements or report have been sent out to members or delivered to the registrar or laid before the company in general meeting. The revision must be confined to the correction in respect of which the previous financial statement or report do not comply with 129 or 134 and making necessary consequential alterations. Basically, the reasons why we are going to revise the financial statement. Okay, just go through these 4 points. Here the intent is immediately preceding. Here the intent is immediately preceding because it doesn't make sense to go before 8 years. If at times you are just looking at the intent of it, practically you see. Just look at the practicality aspects. Just read. Done. Okay. Now, signing of the financial statements. Signing of financial statements. The financial statement, including consolidated financial statement, if any, shall be approved by the board of directors before they are signed on behalf of the board by the chairperson of the company, where he is authorized by the board, or two directors, out of which one shall be your managing director, if any, and the chief financial officer and the chief executive officer, the CFO, and the company secretary of the company, wherever they are appointed, or in the case of OPC, only by one director for submission to the auditor for his report thereon. Read this. Who should basically sign it? What are the options you are having? Okay. First, chairperson can sign when he is authorized by the board to sign. Okay. Or by two directors, out of which one shall be your managing director if he is appointed. If he is appointed, and chief executive officer, CFO, and company secretary wherever they are appointed. Simple. Or in case of one person company, only one director for submission of auditor for his report thereon. Now, what is the minimum number of directors for one person company? One. Maximum? Okay. Okay. At least when photo is. Okay, fine. Tell me. One or maximum one? Then maximum not defined. Great. So you're saying more than one. Fine, hit you. I'll hit you. Wait. Fine. 15. See, the limit is on the number of shareholders. The limit is on the number of shareholders and not on the number of directors in the company. Minimum one director. In private company, what is the minimum directors? Two. Public company, three. One person company, one. But no matter what is the type of the company, the maximum number of directors is 15. The reason being, director may or may not be a shareholder. Correct? Not defined, it seems. The auditor's report shall be attached to every financial statement. Okay, the auditor's report shall be attached to every financial statement. A report by its board of directors shall also be attached to the statements laid before a company in a general meeting. Read this. Done. Okay. Once quickly revise 130 and 131. What are the differences between 130 and 131? The main difference is the applicant. In 130, the applicant is central government, income tax authority, SEBI, or any other statutory regulatory body. And in case of 131, who is the applicant? The company is the applicant. But in case of 130, for how many financial years? 8 financial years. And whereas for 131, 3 preceding financial years. Which one? We'll check. I think it's not there. I'll check and mostly we are looking at the intent of it. Done. Then right of members to copies of audited financial statement. Now members we in the members will have certain rights. Generally, members are your shareholders in almost all the cases. There are exceptionally in some cases, some of your members may not be your shareholders. Correct? So every time when there is an annual general meeting, how do we call for annual general meeting? We give a notice to all the shareholders. In other words, we are giving notice to all the members of the company. What are the four ordinary business? One of them is adopting the financial statements, approving the financial statements. Correct? Now, when I am giving the notice, so I will also send the audited financial statements of the company along with my notice. So, section 136 says that members have the right to copies of audited financial statement. According to section 136, a copy of financial statement, including consolidated financial statement, if any, auditor's report along with every other document is required by law to be annexed or attached to the financial statement which are laid before the company in the general meeting. Now I am laying these financial statements before the shareholders in the general meeting. Now they have to come to general meeting and approve or reject the financial statements. So when I am giving notice itself, I will be sending my financial statements along with it. Now, when I am sending my financial statements, whatever is the annexure for that financial statement, whatever may be the annexure, the basically annexures means your attachments. Whatever are your annexures, even that have to be given to the shareholders. They have a right to get financial statements and all the annexures with respect to the financial statements which are to be laid before the company in its general meeting shall be sent to every member of the company, every trustee for the debenture holder, and all the other persons who are so entitled. Who are these other persons? Who will be the other persons who are not shareholders, not trustees of the, not the trustees of the debenture holder? What are they? Huh? Creditors. Exactly, creditors. Creditors have given you loan. Okay. So in some of the loan agreements, you will see these kind of clauses where they say that all the financial statements have to be given to us as well. Okay. Whoever is so entitled. And don't you think for the other directors? Okay. Not less than 21 days before the date of meeting. Not less than 21 days. This is nothing but your annual general meetings provision for giving notice. You have to give notice not less than 21 clear days. Okay, for now, just remember it as 21 days. We will see what is the difference between 21 days and clear days in general meeting chapter. Okay, go through this. Done. The copies of document can be sent less than 21 days before the date of the meeting. They shall, notwithstanding that fact, be deemed to have been duly sent if it is so agreed by the members. In case company is having share capital, majority of the number entitled to vote and who represent not less than 95% of the paid up share capital. Now look at this. Now there are two possibilities. Company which is having share capital and company which is not having share capital. Now they are asking, can we send these financial statements less than 21 days? Basically, you're sending it like, let's say, 1 week. Instead of 21 days, you're sending it, let's say, in within 14 days, not 21 days, which is more beneficial, giving long duration or shorter duration. For the shareholders, long duration. For company, it's easier to give in the last minute also. Correct? Now, if 95% of the shareholders in value, you are talking about 95% in the value, represent not less than 95% of such part of the paid up share capital of the company, okay, as gives a right to vote at the meeting. Now, if these guys, if these people, these members come and give consent that 14 days notice is sufficient, then that will be reduced from 21 to 14 days, provided you are getting 95% consent from the shareholders. Clear? And when the company is not having share capital, 95% of the total voting power. When there is share capital, we are considering 95% of the total share capital. We are getting consent from those shareholders who are having 95% of the who are holding 95% of the share capital. When your company does not have share capital, then you are considering the voting power. But your 95% rule is the same. Clear? Read both the points. We'll read it once again. In case the company is having share capital, majority in number entitled to vote. One, majority in number who are entitled to vote, and both the conditions. One, majority and who are entitled to vote not less than 95% of such part of the paid up share capital. Now I'll ask you a question. Okay. Now there is a company, okay, which is having 10 members, which is having 10 members. What is the majority here? 6 or above. 6 or above, clear? Now this company wants to reduce the circulation of financial statements to 7 days. Can it be done? Yes. But how many votes should we get? 95% of the paid up share capital. Now, out of these 10, 3 out of these 10 shareholders are holding 95% of the share capital. Okay. Now, remaining 7 of 10 are holding 5%. If these 3 people give consent, if only these 3 people are giving consent, can I reduce the time period to 7 days? Yes or no? Yes. Should be majority of the right? Yes or no? Now, what did they say? 95% consent we need to reduce the 21 days period to 7 days. Understood? Now I am saying that 3 shareholders are holding 95% of the paid up share capital. Okay. And remaining 7 shareholders are holding 5%. Now these 3 people have given the consent. Is this sufficient to reduce it to 7 days? Okay. Wait 1 second. Harish, yes or no? Yes. Yeah, I'm starting with you. Tell. No. Yes. 10 shareholders were there. 3 of them are having 95% holding in the company. Paid up share capital. They are holding 95% of the share capital. Okay. And remaining 5% is held by 7 other shareholders. Now these 3 shareholders have given consent that let's reduce it to 7 days from 21 days. Clear? Now can I go ahead with reducing it to 95, reducing it to 7 days? Artha aita. Or you want me to repeat it once again? Yes. Archana. Okay. So yes or no, you tell that. Later you tell the reason. Yes. Three consent from three. Mukunda. You are here. No. Pakka. Sir, I didn't mark here. Oh, yes, no. I marked. Huh. Okay. See, it is majority of the members and 95%. So, how many are the majority of members here? 7. So, these three people should give consent. Plus, another three members should give consent. Minimum you need 6, right? What is the majority here? It's 6 is the majority. Okay. At least 6 shareholders, 6 members should give their consent that they are ready to reduce it to 7 days. Okay. 3 shareholders is not sufficient even if they are holding 95%. Clear? Everyone is clear with this? But then one more point is missed out. Anyways, that I did not mention in the question. Entitled to vote. Now, out of these 7, okay, we can divide the 7. We can divide the 7 into 5 and 2 out of 10. These two shareholders do not have right to vote because they are preference shareholders. So together, these guys and these guys are holding 5%. Now, what is the majority number? 5. Because only 8 of them are entitled to vote. Okay, 2 of them out of 10 shareholders, 2 are preference shareholders and they are not entitled to vote. So we are not calculating them for the purposes of majority of the shareholders. Is this clear? We are only calculating those who are entitled to vote. Those 3 shareholders are have the right to vote and the remaining 5 shareholders have right to vote. So totally 8 shareholders are having right to vote. Here the majority is 5. Here, just if I get consent from 5 shareholders, it is more than enough. Clear? Everyone is clear. If anyone is having doubt, okay. See, what did they say? Majority of the members. That point you understood. Okay. First thing, 95% you understood. And then they are saying majority of members. Let's see in our class, 20 students are there. What's the majority here? Minimum majority. 11 is the majority. Correct? 11 is the majority. Now, in our company, how many shareholders were there? 10. What is the majority here? 6. But they are telling that majority of those numbers who are entitled to vote. But now, in the next example, how did I change it? 2 shareholders are preference shareholders who do not have right to vote. So, we are not going to count them. According to me, I want to get majority out of 3 plus 5. These guys are having right to vote. Okay. Now, how much is it? 8. What is the majority of 8? 5. So, at least from 5 shareholders, I need to get consent. And the consent has to be at least of the 95% of the paid up share capital. The 3 guys are anyways holding. Clear? So, consent has to come from, basically, I need consent of 95% of the paid up share capital plus majority of the shareholders who are entitled to vote. Oops. Now, for Section 8 company, the same thing you will read it as not less than 14 days. Whatever was 21 days for every normal company, for Section 8 company, it is 14 days. even when we are studying section 96 for annual general meeting, the time period for giving notice to section 8 company is not less than 14 days. Clear? And in case of Nidhi company, it is sufficient compliance with the provisions of this section if intimation is sent by public notice in the newspaper circulated in the district in which the registered office of the Nidhi is situated. Okay, stating the date, time, and venue of the annual general meeting and financial statements with its enclosures can be inspected at the registered office. So, what are they telling? In case of Nidhi company, you don't have to send them individually. You can merely make a public notice where in a newspaper which is being circulated in the district where the registered office is situated, and you can give a time period for all your members to come to your company and inspect your financial statements. This is for Nidhi company. Clear? Obligation of listed company. Go till here, everyone is clear. Okay. We'll continue. In case of a company whose shares are listed on the recognized stock exchange, provisions of 136 shall be deemed to have been complied with if the copies of the documents are made available for inspection at the registered office during the working hours. Usually the working hours are 9 a.m. to 5 p.m. Okay. For a period of 21 days before the date of meeting, and a statement containing the salient features of such documents is in the prescribed form, that is AOC 3, or copies of the documents as the company may deem fit is sent to every member of the company and to every trustee of the debenture holder not less than 21 days before the date of meeting. Understood? You are allowing the shareholders or your debenture trustee to come to your company and inspect your financial statements during the working hours. That is from 9 a.m. to 5 p.m. Okay. And then you will also prepare a document called as salient features of such documents. Which documents? The ones that are available for inspection. Whatever documents are available for inspection, you will prepare another document called as salient features of those documents, in which form? AOC 3. Companies which are required to comply with Companies Indian Accounting Standard Rules 2015 shall forward their statement in AOC 3A. How many forms did we see till now? Four. Four or three? Four. AOC 1, AOC 3, AOC 3A, and AOC 5. Okay, perfect. Go through this. We'll start. Manner of circulation of financial statements in certain cases. Further, in case of all listed companies and such public companies which have net worth of more than 100 crores and turnover of more than 10 crores, should both the conditions be met or one condition, any one condition? And both the conditions have to be met. The financial statement may be sent by electronic mode to such members where the shareholding is in dematerialized form and whose email IDs are registered with the depository, where shareholding is held otherwise than by dematerialized format, to such members who have positively consented in writing for receiving the notice by electronic mode by dispatch of physical copies through any recognized mode of delivery specified under Section 20 of Companies Act 2013. One is, if your shares are in dematerialized form, you will get financial statements by electronic mode, generally by email. Okay, and if at all the shares are held in physical form and someone has requested that you don't have to send me in by way of electronic mode or by way of email, in those cases you have to send the physical financial statements. You will be sending it by courier. Clear? Where now these guys who are having physical share certificates, they are requesting the company to send it by email. Generally, whose shares are held in physical form, the company has to send the financial statements in hard copies has to be sent. But whereas even if you are having physical share certificates, but you are requesting the company to send the financial statements in soft copy or in electronic mode, it has to be sent accordingly. Clear? Just go through these three points quickly. Done. Now, every listed company is also required to place its financial statements, including CFS, if any, and all other documents required to be attached on its website, which is maintained by or on behalf of the company. Now, companies will have its own website. So, all the listed companies should place their financial statements and consolidated financial statements and any other related documents to that should be uploaded to its website. According to Regulation 29, the listed entity shall give prior intimation to the stock exchange. What is LODR? Listing obligation and disclosure requirements. Write it down. SEBI listing obligation and disclosure requirements regulations 2015. Listing obligation and disclosure requirements regulation. What? In general meetings. That to place it on the website. No, it's there in general meeting. Okay, I think so. Intimation shall be given at least 5 days in advance, and such intimation shall include the date of such meeting of board of directors. Every listed company having subsidiary or subsidiary shall place separate audited accounts in respect of each of the subsidiary on its website. Okay, first go through these 3 points. Woke up too early today, no? Yeah, yeah. Actually, ಅಷ್ಟೊತ್ತಿಗೆ like you will be able to relate to that. Okay, done, clear? Guys. A listed company which has subsidiary incorporated outside India. What are they telling? A listed company which has a subsidiary incorporated outside India. Basically, an Indian company is having its subsidiary outside India, herein referred to as foreign subsidiary, where such foreign subsidiary is statutorily required to prepare consolidated financial statement under any law of the country of its incorporation. The requirement of this proviso shall be met if consolidated financial statement of such foreign subsidiary is placed on its website of the listed company. Read this and explain. Follow. In simple words, they are saying that now there is a foreign subsidiary. It will have its own website. If on its website it has uploaded financial statement or consolidated financial statement, it is deemed that as per the provisions of that country, it is deemed that this provision has been complied with. Okay. Read that where foreign subsidiary is statutorily required to prepare consolidated financial statement under any law of the country of its incorporation. Where it is incorporated, as per that law, it has prepared consolidated financial statement. The requirement of this proviso shall be met if that CFS of a foreign subsidiary is placed on the website of the listed company. Now it is placed on the listed company's website. Clear? Where the foreign subsidiary is not required to get its financial statements audited under any law of the country of its incorporation and which does not get financial statements audited, the holding Indian listed company may place such unaudited financial statements on its website, and where such financial statement is in language other than English, a translated copy of financial statement in English shall also be placed on the website. Now, if it is a foreign subsidiary and they are maintaining their books of accounts in other language, how will you maintain it? You will first translate it and then upload it. Then copy of financial statement to be filed with the registrar, section 137. How will you file your financial statements with the registrar? AOC 4 or AOC 4 CFS. CFS stands for Consolidated Financial Statements. If you're filing your consolidated financial statements, you will use AOC 4 CFS with the registrar of companies within 30 days from the day on which AGM was held and adopted. Now, what you remember the process? I am preparing the financial statements. Okay, it is audited by the auditor, and then I am presenting or I am laying these financial statements before the shareholders in annual general meeting. Once the shareholders approve it, once the shareholders approve it, then within 30 days from the day, when will they approve it? On the day of general meeting. Once they approve it, within 30 days, I have to file it with the ROC in which form? AOC 4 or AOC 4 CFS. Then read this point. Now let's say the financial statements were not adopted. What do you mean by not adopted? Basically, think of it like they are not approved. The shareholders have rejected it. And the annual general meeting is over. Now, will you file these unadopted financial statements? Yes, you will file these unadopted financial statements as provisional ones until the adoption at the annual general meeting. If for some reason it was not adopted, then you will file these provisional financial statements with registrar, and this will be valid until you are filing until the adoption of at the annual general meeting. Financial statements adopted in AGM shall be filed with registrar within 30 days of such of the date of the adjourned annual general meeting. Let's say the annual general meeting was supposed to be held on 30th September of 2025. So financial statements were supposed, listen to me carefully. Financial statements were supposed to be adopted on 30th September 2025, which is your annual general meeting date. For some reason, you have adjourned the meeting. What do you mean by adjourned meeting? You're postponing it. You're not canceling it. So let's say it is adjourned to 15th October 2025. Okay. Now what will happen? So within 30 days of the date of such adjourned annual general meeting. So it was adopted when? It was adopted on 30th September or 15th October? 15th October. It was adopted in the adjourned annual general meeting. So 30 days from the adjourned annual general meeting, you have to file it with ROC in which form? AOC 4 or AOC 4 CFS with such fees or such additional fees as may be prescribed. And in case of one person company, 180 days from the closure of financial year. But here it is 180 days from the closure of the financial year. But for every other company, it is within 30 days from the adoption, from the date of adoption of the financial statements. What was AOC 1? Wait, AOC 1. Don't turn. AOC 1. Huh? Salient features of financial statements. AOC 3 and 3A. To do what? See AOC 3 and 3A. Check once. Okay. AOC 5 at a place other than registered office. AOC 4 is for filing your financial statements with the registrar. Now there is, in the old syllabus, you had a chapter called as XBRM. Okay. It is now how now have you seen the file format of Excel sheet? Okay, it will be as Excel SX. Okay. Similarly, there is a file format for for filing your financial statements. It is called as XBRL. Okay. For some companies, the following class of companies shall file their financial statements and other documents under 137 with the registrar in which form? E-form, AOC4, XBRL. Okay, the form name is only AOC4, XBRL. Which company? Companies listed on stock exchange and their subsidiaries. So a company is listed on stock exchange. Let's call it A Limited. And its subsidiary is B Limited. A Limited should file it in AOC for XBRL. Even B Limited will have to file its financial statements in AOC for XBRL. Clear? Then, companies having paid up capital of 5 crores or above, companies having turnover of 100 crores or above, all the companies which are required to prepare their financial statements in accordance with Companies Indian Accounting Standard Rules 2015. Go through these 4 points. One is listed company and its subsidiaries, then having paid up capital of 5 crore or above, or, and then turnover of 100 crores or above, and all the companies which are required to prepare their financial statements in accordance with Indian accounting standards. What was section 128? 129? 129A? 130? Reopening or revision? Reopening of financial statement. 131? Wait. 133? And 134 is signing off financial statements, and even board's report is covered under 134. Right. Right. And for NBFCs, housing finance companies, and companies engaged in banking and insurance sector are exempted from filing financial statement under these rules. They need not file it in XBRL format. Okay. And mostly they are regulated. They are regulated, and you are filing the financial statements to now a bank has to file its financial statements with RBI as well. And if you are an insurance company with IRDA, okay, all those compliances will anyways be there. So this point is important. Once you file XBRL, when will you file XBRL? Either you are a listed company. Let's take an example of a listed company. It is a listed company and it has filed its financial statement already, let's say for 3 financial years in XBRL format. Okay. And after 3 years, there is also an option to delist yourself. Basically, you are no longer a listed company. Even that option is there. Even after you get delisted and you are not coming under these 4 categories, even then you have to continue filing your financial statements in XBRL. Once you come under XBRL's category, you should forever keep filing your financial statements in XBRL. Clear? Okay. Okay. After the break, let's start with NFRA. ಲಾ ಸಬ್ಜೆಕ್ಟ್ಸ್ ಅರ್ಥ ಮಾಡ್ಕೊಳೋದು ಒಂಚೂರು ಕಷ್ಟ ಆಗತ್ತೆ ಬಟ್ ದಟ್ ವೇ ಯು ಆರ್ ಕ್ವೈಟ್ ಡೀಸೆಂಟ್ I gave it back to him. Hey, I gave it back. Hey, I've given it back. My phone is there. Let's start. Call them soon. Yeah, that he was not hearing something more. But that is recording is which what is recorded? Hey, yeah. What putting? Control. Stop. But almost it was even that in must influence. Section 132. That's the only section that was left out previous. 128 was books of accounts, 129 financial statements, 130 is reopening, 131, 131 voluntary revision, and 132 is your NFRA, National Financial Reporting Authority. Come directly to NFRA, objectives of NFRA. Keep going through this introduction of NFRA till the others now, quickly. Where are these four girls? ಅವನು ಎದ್ದು ಬರ್ತಾನೆ ನೋಡಲ್ಲಿ ಹಿಂಗ but actually, can you call them? You can also call. Someone call quickly. So Charles, no way can call bigger than how much it is. Hey, read that. Call them quickly, no? See, NFRA is one of the most, it's one of the most powerful regulatory bodies. Okay. SEBI, if you remember, anyone who has attended CMSL, SEBI has all the three functions: executive, judiciary, and legislative functions. Okay. Even if you read, NFRA is a quasi judicial body to regulate matters relating to accounting and auditing. With increasing demand for non financial reporting, it may be referred to as National Level Business Reporting Authority to regulate standards of all kinds of reporting, financial as well as non-financial, by the companies in the future. NFRA shall give its recommendation on the accounting standards and auditing standards. So it will give recommendations on, whatever under 133, whatever accounting standards we saw, who is recommending those? NFRA is recommending the accounting standards, but who is actually enforcing the accounting standards? Central government. So in a way, NFRA will say these have to be your accounting standards. Okay. And these accounting standards will be enforced by the central government. Clear? Now, objectives of NFRA. Make recommendations to central government. What is it doing? Making recommendations to central government on formulation of accounting standards and auditing standards for adoption by companies or class of companies. How will you remember this? Just remember the keywords: recommendations, monitor, oversee. Three words: monitor, recommend, monitor, and oversee, and perform. So NFRA shall make recommendations to central government on formulation of accounting standards and auditing standards. Run. Clear? The first point is clear, making recommendation. Second one, monitor and enforce the compliance with the accounting standards. Monitor and enforce the compliance with the auditing standards. So you're monitoring and enforcing what? Accounting standards as well as your auditing standards. Oversee the quality of service of professionals associated with ensuring compliance with such standards. Who will generally ensure that accounting standards are complied or not? Who will generally who is the one who will be generally responsible for checking whether a company is complying with accounting standards or not? CS, yeah. CA, generally CA. So most of the cases, NFRA is also kind of like a regulatory body for all the chartered accountants. Okay. And even in certain cases where even CS is involved, that's the reason they particularly did not say CA or CS. They said service of professionals associated with ensuring, all those professionals who are ensuring compliance with such standards and suggest measures required for the improvement in quality of service. Done. And perform such other functions as may be prescribed. Remember the three: recommend, monitor, oversee, and perform. What are you first? What are you recommending? Two things: accounting standards and auditing standards. What are you recommending, everyone? Accounting standards and auditing standards. And what are you monitoring? Okay. And overseeing whom? Overseeing the quality of service of professionals associated with ensuring compliance with such standards and suggest measures required for improvement in quality of service and perform such other functions. Clear? Now NFRA, who will be the ones who will be heading the NFRA? Who will be the one responsible for management of NFRA? It consists of chairperson, who shall be a person of eminence and having expertise in accountancy, auditing, finance, or law, to be nominated by central government. They should have expertise in four things: accountancy, auditing, finance, or law, to be nominated by central government. So, who is nominating the chairperson? Central government. And such other prescribed members not exceeding 15. So, one chairperson and other members will be there. Maximum, how many other members will be there? Maximum 15 members of part-time and full-time members as prescribed. Either they are part-time members or full-time members. So, chairperson plus less than or equal to 15 other members, and these are divided among part-time each division of NFRA shall be presided over the chairperson or a full-time member authorized by the chairperson. So NFRA, you remember in companies we have different committees, audit committee, nomination. Similarly, think of it like even in NFRA you have different divisions. Each division should be headed by chairperson or any other full-time member, and this full-time member should be authorized by the chairperson. What was the first point before this? One chairperson and such other members not exceeding 15. And these 15 shall include both part-time as well as full-time. Now, NFRA will have multiple divisions. Each division shall be headed either by the chairperson. If it is not headed by chairperson, then it will be headed by a full-time member. And this full-time member should be authorized by the chairperson. Then there shall be an executive body of the NFRA consisting of chairperson and full-time members of such authority for efficient discharge of its functions, subsection 2 of 132 of the Act, okay, and subsection 4 of 132 of the Act, provided that the terms and conditions and the manner of appointment of chairperson and members shall be prescribed. Okay, prescribed means rules. Okay, read the third point. So the executive body of NFRA will only consist of chairperson and full-time members. Okay, full-time members of such authority for efficient discharge of its functions. Whose functions? NFRA's or executive bodies? Executive bodies functions to discharge efficiently the executive body's function. It will comprise of whom? The chairperson and the full-time members. Provided that the terms and condition and the manner of appointment of the chairperson and members shall be as prescribed. Done with 3 points. What was the first point? Chairperson and 15 other members, and these 15 members will consist of both full-time and part-time. Each division of NFRA should be presided by. And third point, executive body shall consist of and full-time members. Okay. The chairperson and all members shall make declaration in prescribed form about no conflict of interest or lack of independence in respect of their appointment. Read this point. They are making a declaration of their independence in respect of their appointment. The chairperson and all full-time members shall not be associated with any audit firm related to consultancy firm during the course of their appointment and 2 years after ceasing to hold their appointment. So, what did I say? Generally, NFRA will be overseeing chartered accountants. So, how will chartered accountants generally work? They'll form a firm. Okay. So you are either the chairperson or you are a full-time member. And whenever you are whenever you are acting as a chairperson of NFRA or acting as a full-time member of NFRA, you should not be, it is mandatory that you should not be associated with any audit firm during the tenure. Okay, let's say your tenure was for 5 years. For 5 years, you should not be associated with any audit firm or consultancy services. Okay, including your big four or anything. Okay, and after 5 years, you would have come out of your position as chairperson. Okay, and after you are resigning or after you cease to be the chairperson or full-time member for 2 years, also you will not be associated with any audit firm. Okay, giving you. So let's say one chairperson was appointed at this point of time. This was his tenure. Can he be associated with any audit firm? No. But after his tenure as chairperson for 2 years, even after he stopped being the chairperson, even for 2 years, he will not be allowed to be associated with any audit firm. Read this. Chairperson and all the members shall make a declaration about no conflict of interest or lack of independence in respect of appointment, the chairperson and full-time members. But this provision is not applicable for part-time members. So full-time members shall not be associated with any audit firm or related to consultancy firm during the course of their appointment and 2 years after ceasing to hold such appointment. Clear? Then the central government may appoint secretary and such other employees as it may consider necessary for efficient performance. Now employees can be appointed. Is only 15 members and one chairperson enough to run NFRA? No, you need employees. So central government may appoint secretary and such other employees for efficient performance of functions by NFRA under Companies Act 2013. Head office of NFRA shall be at New Delhi. NFRA shall meet at such time and places and shall observe such rules and procedure in regard for transaction of business at its meeting. Remember mainly these 5 points. The first 5 points, remember mainly these 5 points. Last sixth and seventh point is easy. They're talking about where is its head office, New Delhi. And it shall meet at such time and place. Okay, clear? What was the first point? And 15 other members consisting of part-time and full-time. Second point, third one, fourth point, independence. So what is the keyword for fourth point? Independence. How are you ensuring that all the members are having independence? The chairperson and full-time member will not be associated with any audit firm and shall not and consultancy services during their tenure and 2 years after the expiry of their tenure. And the fifth one, central government may appoint employees for efficient discharge of functions by the NFRA under the Companies Act 2013. Go through these 7 points. Go through these 7 points. You both are not focusing. Focus. Done. Maintenance of books of accounts. NFRA shall cause to be maintained such books of accounts and other books in relation to its accounts in such form and manner as the central government in consultation with CAG prescribed. Controller Auditor General of India, CAG. You remember? Basically, think of this person as your chartered accountant for the government. That's it. Not for government companies, for governments. So he's the chairperson now. When did he join? 23rd July 2025, recently. Okay. Former chairpersons, these are the chairpersons, full-time members. Currently, these are the full-time members. You can get their profile. Okay. Hmm. Similar to CCI. What? Where? Where CCI? Ah, Competition Commission of India. Oh, okay. It's there, no. Clear? No, guys, quiet. Manoj, audit of NFRA and annual report to central government. Accounts of the NFRA is required to be audited by CAG at such intervals as may be specified by him, and such accounts as certified by the Comptroller and Auditor General of India, together with audit report thereon, shall be forwarded annually to central government by NFRA. Read the first paragraph. Comptroller is it's a department in central government where they are the ones who will maintain books of accounts for all IBBI, SEBI, NFRA. They're more or less like chartered accountants for these guys. Will start raining. So till 5 o'clock. Okay. Okay, done. Read the first point. It was nice there, man. There you didn't have anyone to talk to. For super. Read. Read the first paragraph. Done. And NFRA shall prepare in such form, it shall prepare in such form at such time for each financial year. What should it prepare? It should prepare an annual report. In which form? In such form and at such time, okay, giving full account of its activities during financial year and forward a copy thereof to the central government, and the central government shall cause the annual report and audit report given by the CAG to be laid before each house of parliament. So it will be, what will happen? NFRA will prepare annual report, okay, and this will be given submitted to CAG, and CAG will further submit it to central government, which will be laid before the each house of parliament. Read the second paragraph. Jurisdiction and imposition of penalties by NFRA. Either suo motu or reference made to it by central government for such class of body, corporates or persons in such manner prescribed into the matters of professional or other misconduct committed by any person or firm of chartered accountants registered under Chartered Accountants Act 1949. So it shall have the power to investigate. First thing you remember that it will have power to investigate. It NFRA by itself can initiate the investigation, or when central government is making a reference to NFRA, basically requesting them to conduct investigation with respect to such class of body, corporate persons in such manner prescribed into matters of professional or other misconduct committed by any member or firm of chartered accountants registered under the Chartered Accountants Act of 1949. Read the first one. Hmm. Because, as in, like, why? CAG comes under, uh, CAG comes under, it is created under Article 148 of Constitution. So it's basically public information, and it's just that who created NFRA. End of the day, it was created by the Parliament. Now, who is the one to oversee NFRA? It is an independent body. It does not come under MCA as such. Hmm. No, of course. NFRA is basically an independent body. You see, you cannot give 100% independence to anyone. Even ROCs come under MCA, so the hierarchy is ROC, RD, and MCA. But NFRA is a separate body altogether. Now, who is the one to oversee them? Parliament. Done. What are you doing? I thought you're pulling his cheeks. Provide that no other institute or body shall initiate or continue any proceedings in such matters of misconduct where NFRA has initiated investigation. Once NFRA has initiated investigation, no other body should conduct their inquiry or any other proceedings with respect to that. Clear? Go through till your jurisdiction, powers, and imposition of penalties. Guys, read that. Guys, keep it for two. Why? Go sit there alone, okay? No, no, no. You sit this side. Who is talking? You want to focus, no, they're not letting you focus. Keep your phone there in the front first. Keep it there. Powers of NFRA, power to investigate. We just saw, no, it can initiate investigation either suo motu. What do you mean by suo motu? But on its own, or reference made by central government for such class of body, corporate, or persons as may be prescribed into the matter of professional or other misconduct. Powers of civil code. Okay. Discovery and production, summoning and enforcing attendance, inspection of any books, issuing commissions for examination of witnesses. Go through these 4 points and remember. Suo motu means on its own. Read. Discovery and production, summoning and enforcing, inspection, and issuing commissions. Remember the four? Done. Then power of imposing penalty. Imposing penalty not less than 1 lakh, which may extend to five times the fees received in case of individual, and not less than 5 lakh, which may extend to 10 times the fees received in case of firms, debarring member or a firm from being appointed as auditor or internal auditor or undertaking any audit in respect of financial statements or internal audit of the functions and activities of any company or body corporate performing any valuations under section 247. Just remember that for now. For minimum 1 lakh, maximum 5 times the fees in case of individuals. Where it is a firm, minimum 5 lakhs, maximum 10 times. Okay. Huh? Hmm. They're enjoying the scenery. Come here. ಚೆನ್ನಾಗಿದೆಯಾ ನೋಡಕ್ಕೆ that sound is coming. Okay. Now, central government to prescribe accounting standards. The central government may prescribe the standards of accounting or any addendum thereto as recommended by ICAI, constituted under Section 3 of Chartered Accountants Act 1949. So, who is the one prescribing the standards of accounting? Central government. But who is recommending central government? NAFRA. Generally, what we saw the objectives of NFRA. No, the first the what was the first function? Recommend accounting standards and auditing standards. In consultation and after examination of the recommendations made by the NFRA. The ministry has subsequently clarified that till the standards of accounting or any other addendum thereto is prescribed by central government in consultation with recommendation of NFRA, the existing accounting standards notified under Companies Act 1956 shall continue to apply. Read this. What? Hmm. Really, back then also accounting standards were there, no? If it is still applicable, you will still continue to use them. You don't have to make new ones. But can you make changes to the ones that you made in 1956? Yes. See, what are they saying? The accounting, read the last sentence. The ministry has subsequently clarified that till the standards of accounting or any addendum thereto is prescribed by the central government. Basically, till any new accounting standards or changes to accounting standards is prescribed by whom? By the central government. How will they prescribe? By way of rules. In consultation and recommendation of NFRA, the existing accounting standards, which ones? The ones which were prepared under Companies Act 1956 will continue to apply. They are saying you don't have to make new accounting standards. But if at all they have subsequent, if at all they have prescribed or any addendum thereto is prescribed by whom? Central government. Until then, the existing accounting standards made under 1956 Companies Act will continue to be applicable. Is this clear for everyone? They are not saying that 2013 will we have to make a new accounting standards. Nor are they saying that as it is, whatever were the accounting standards under 1956, they are not saying that that will be applicable as it is. All they are saying is it will be applicable until and unless any addendum or any changes are being prescribed by the central government. So whatever are your existing accounting standards made under Companies Act 1956 will be applicable, and today central government can make changes to these accounting standards. Clear? Now coming to Ind AS. Indian accounting standards are accounting standards prescribed under 133 of Companies Act. Indian accounting standards are specified in the annexure to the Companies Indian Accounting Standards Rules 2015. These accounting standards are converged with the corresponding IFRS. So initially, basically what happened internationally, we wanted one common accounting standards. And one of the accounting standards that came was IFRS, okay, where globally IFRS was being accepted. But then it was not possible for India to adopt it as it is. So they made certain changes and we are calling it Ind AS. We have adopted IFRS, but we have done our own, we have put our own masala to it, okay, and then we are calling it Ind AS. They are converged with corresponding IFRS, which is nothing but International Financial Reporting Standards. Gap, generally accepted. How is it different from IFRS? Later, 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 later. Indian accounting standards as specified in annexure to the company's Indian accounting standard rules 2015. Applicable to class of companies specified in rule 41 of company's Indian accounting standard rules 2015. Read the first point. They have not given which are those companies. All they are saying is now the rules 2015 is applicable to that class of companies specified in rule 41 of the company's Indian accounting standard rules 2015, and company's accounting standard rules 2006 is applicable to companies other than the companies mentioned in the first point. Okay, clear? So first point is saying 2015 rules are applicable to those classes of companies which are specified under Rule 4.1 of Companies Indian Accounting Standard Rules 2015. Mandatory basis for accounting periods beginning from 1st April 2016, which the comparatives for the period of 31st March 2016 or thereafter. Rule 412, the following companies shall mandatorily comply with Ind AS, namely companies whose equity or debt securities are listed or are in the process of being listed on the stock exchange except SME exchange. See, now anyone who has not attended CMSL classes, this is for you. Listen to me carefully. What are the two stock exchanges we know? NSE and BSE. We call this main board. What do we call this main board? This is one of the kind of stock exchanges. We have four to five different kinds of stock exchanges. We have main board, which is your NSE and BSE, and you have SME. SME is for small and medium enterprises. If you are a small and medium enterprise and you want to get listed, you can get listed on the SME exchange. And then you have Innovators Growth Platform. We call it IGP. Then you have social stock exchange. You have different kinds of stock exchange. In the first point, what are they telling? Companies whose equity and debt securities are listed or are in the process of getting listed on the stock exchange, except where? Except SME exchange in India or outside India having net worth of 500 crores or more. Here, they are not just talking about listed companies, but those listed companies which are having net worth of more than 500 crores. Clear? Not just any listed company. Be very careful here. Do not get confused and think that it is all listed companies other than SME exchange. But those listed companies whose net worth is 500 crores or more. Then unlisted companies having net worth of 500 crore or more, holding subsidiary, joint venture, associate companies covered above. So listed companies and unlisted companies having net worth of 500 crore or clear. And it can be listed either in India or outside India. What do you mean by listed outside India? You have stock exchanges in every country, right? For New York, you have NYSE, New York Stock Exchange. So even if your company is listed there and your net worth is 500 crores or more, then this point is applicable to you. Which one? Mandatory basis for accounting periods beginning on or after 1st April 2016 with the comparatives for the periods ending on 31st March 2016 or thereafter. Read this. Open. And now for 2017, companies whose equity or debt securities are listed or are in the process of getting listed on stock exchange in India or outside India, having net worth less than 500 crores. Here in the above point, we told 500 crores or more. Now we are talking about all those listed companies which are either listed in India or outside India, and they have net worth of less than 500 crores. See what is happening. In 2016, we are making it applicable only for big companies. Now you had enough time for you to adopt yourself to the accounting standards. So from 2017, what are they saying? Even those companies whose net worth is less than 500 crores. And the second one, unlisted companies having net worth of 250 crores or more, but less than 500 crores. Here, but for unlisted companies, it is changing. It is 250 crores, but less than 500 crores. Here it is for both more than or equal to 500 crores. You're understanding? Accounting standards, for whom is it more important? For all the companies, following of accounting standards is important. But for which companies it is more important? The big companies. Okay. And how did they define big companies? 500 crores or more. That's the reason, right from 2016, all these accounting standards are applicable to whom? To listed companies and unlisted companies whose net worth is 500 crores or more. Whereas from 2017, what is happening? For listed companies less than 500 crores, even if your net worth is 1 crore or 10 lakhs or 100 crores, does not matter. You have to comply with it. But for unlisted companies, more than or equal to 250 crores, but less than 500 crores. Focus. Last no? Pakka. Holding company, subsidiary company, joint venture or associate company of companies covered above. Clear? Then, in case of NBFCs, for accounting periods beginning on or after 1st April 2018, then for the following NBFC shall comply with Ind AS. NBFCs having net worth of 500 crore or more, holding subsidiary, joint venture, associate company. Here we are not talking about listed NBFC or unlisted. We are just talking about all the NBFCs. Okay. Here, what is the criteria? Again, 500 crores or more, and holding company of this subsidiary, joint venture, or associate companies of the companies covered under item A. That is the above point. Clear? Read the third point. This is this one. Okay. Read these 3 points. Let's quickly remember. For 2016, on or after 1st April 2016, listed companies with net worth of how much? 500 crores or more. And the same thing for unlisted companies, crores or more. And holding company, subsidiary company, associate company of the above mentioned companies. Now from 2017, listed companies other than SME exchange, it can be either listed in India or outside India, having net worth less than 500 crores. And the next one, unlisted companies more than or equal to 250 crores, but less than 500 crores. And the same thing, holding subsidiary, associate, and joint venture of the above mentioned companies. And for NBFCs, 500 crores or more, holding subsidiary, associate, and joint ventures. Then, in case of NBFCs for accounting periods beginning on or after 1st April 2019 with comparatives for the periods ending 31st March 2019. NBFCs whose equity or debt securities are listed or in the process of getting listed. It is as of now unlisted, but it has made an application with the stock exchange and SEBI to get itself listed. But it is not yet listed. The process is ongoing. Okay. Having net worth less than 500 crore rupees. And even here, the same thing as for unlisted companies. If NBFCs that are unlisted more than or equal to 250 crores, but less than 500 crores. Holding subsidiary, joint venture, or associate companies of the companies covered under item P. Okay. Clear, simple. Sir. Okay. Question. Huh. Question. Sent in the group as well. Okay. Can start writing. You want me to teach? Start tomorrow. Auditors. No, don't send them. I asked you to get yourself added, no? Okay, I'm starting the timer. Everyone set with books? I'll start. Started. Same order. Citing before. You can refer to the provision. Salesperson is not there now. It's probably very important. Shall be. Is it in accordance with Companies Act? No? Pakka? How many of you are saying no? Nandan is thinking. Is it in accordance with Companies Act? Down, down. Gone. Sir, the lecture did not mention about the channel. So if it's case, that's it needed. They have not mentioned. So we just ignore that part. Yeah, if they have not mentioned, you can ignore and assume that that person will. With conclusion. Nice. Good improvement. Done. Hey, stop. Everyone stop it. You could have written it's not complying with section 134 instead of just writing provisions on it. Yes, I say this like sorry, a little bit actually at the center. So it is fun. Yeah. Anyone else who's done? Archana, see your answer. Isn't it more structured? Later send the photo and send my show. You didn't conclude it. It's fine. It's correct. I'm not saying it's wrong. Yes. You first stop writing in chips. But you could have written it much better. Everyone at the same time. Sure. It's fine. I told no, you can divide it always at least in three parts. State the law, analysis, and then conclusions. What you guys are doing is merging the analysis and the conclusion. That's the only thing. If you break down analysis and conclusion, I'm not saying it's wrong. It's not that you will not get marks. It's much more simpler. And here you have just written being managing director. If you read that provision, they say if any. So even from managing director. So rest all is fine. Even you also. Whenever you see, it is not mandatory to appoint managing director. If you read that provision, it specifically says managing director, if any. Read that provision in your textbook, 134. Huh? It is, that's what. When you're stating the law, you're stating the bare provision, no? Okay. Oh, no, it's sufficient. But then there is CS also, no? So then the third one will come. You didn't write about CEO, CFO, no? Right? They did something to you. C and CFO. Right. Oh, it's there, no? Open that provision. Okay. Clear? Send that photo you sent me quickly. Check this. Everyone, see, always what did I say? State the law, do your analysis, and then conclude. Stating the law as per section 134 of Companies Act 2013, it states that who shall sign the financial statement? The financial statement shall be approved by the board of director, must be signed on behalf of the board by the chairperson. It must be signed by any two directors, out of which one shall be managing director. Even you have missed that. If any, it is not mandatory to appoint a managing director. If you read the provision, only and only those circumstances where the company has managing director, only then managing director signature is needed. Okay? Then CEO, CS of the company. Analysis, in this case, the company. If you see this answer, isn't it well structured? It is easier to write. This is how you should be writing. Clear? One more question. Okay. Tomorrow I'm carrying that. Minus. This is your next question. Guys, everyone, this is your next question. Send it in the groups as well. You're sharing, no? Keep solving the questions. You will get confidence. Okay, I'll start. Ready? हाँ सर timer started. Chief Executive Officer, Chief Financial Officer, Audit Officer, Secretary of the Company, similar to internal, you don't know internal, you do the same. So, what is it? They want to be like this. Correct, that's what it is. Because if you do that, you not automate that with the technology. How the other person has to work on it back in. So, what you should study it for me is a it's just in the everyone. So, what was done? There is yes, I love it. See you. You but it become very distribution. Yeah, you are able to calculate percentage, estimate. Usually, ancestry shall cloud percentage was the ancestry and the device is a it does the same money, the family, some money as has more than this. Confusion, instantly. Confusion about the ancestry also in the whole other story. Simple actually, what is exactly it's simple, it's still like here, the world of my God, they got it to change it. We have my own issue. Is the king so it's the other king. How many of you are done? You notice? Not relevant. Huh. But other you remember, no? Then okay. Yeah. But you can just write, they're asking the process. If you read the question, if you examine the validity of the application file, they're just mentioning that NCLP, but otherwise it's fine. They're not talking about preservation. You have written about preservation. 130 is only. This is. Last money. This is no. But it's not. It's fine. So I could be going. So, but one day, read the law. Read the law. You can just mention it, keep going up. But if you could depend on only matter, it's not a very this one is the hard problem. That has to be the why are you doing it? And then if this one is there discussions, then you should write this one is just and then generally the company is instead of this is happening. The respect of mention of user returns to clear, earlier that clear financials. So you cannot open a clear that clear financials. I think that's good. So I know what are trying to write it in your office. So the session record about that. You can exactly address it. In the 10%, we will tell it. We are telling it. To be more precise, 8 years, yes, we are looking at those years. Or maybe if you listen to financial year, and they are saying that okay, this one says the budget is more than only I get one second. Say no problem. To be remembered, not many of us I no, it is easier to remember than not saying it's wrong. But instead of just to make your answers more polished, when you are reading, read it as minimum. I have no objection. But it's first, that's what this becomes a habit. And guys, how many of you, when you were writing that 8 years question, that 8 years point, how many of you use the words immediately preceding the current financial year? What did you use? See, can I say not less than and minimum is the same? Not more than and maximum is the same. Both of them mean the same, right? So, in a way, you can write maximum, right? But see, think about it. It is just one time effort that you need to put. Initially, yes, it is a new language and it is difficult to remember and write it like that. But given enough number of revisions, don't you think every single time you are writing your answers, instead of writing minimum, can't you write not less than? Doesn't it just sounds more polished? Like your answers just become more polished. And now they have told immediately preceding 8 financial years from the current financial year. If you just, it's the same thing. Many of you would have written 8 years before. Correct? Then it's not wrong. Legally, I'm not saying that it's wrong. But when you are writing, remember ICSI is not looking where to give this person marks. It is looking where can I remove the marks. It's always doing that negative calculation. So in those cases, just making your answers sound more polished and professional will help you clear your exams whether you like it or not. Instead of saying 8 years before, write immediately 8 preceding financial years. Simple, right? You mean the same thing, correct? And what's the answer for this? Can they reopen that financial year? Anyone saying yes? No? Everyone's clear with this? Okay. So this is how you keep writing, keep practicing, guys. You will see everyone. What I understood from all these days, you guys are understanding and are even able to apply it to the facts. The same, the questions that we are solving in class, similar questions will be there even in your exam. Probably the length of the questions might be more. ICSI will give you unnecessary information. You need to understand which information is needed and which information is not needed. Basically, you have to filter out only the information that is needed for you. They will confuse you with unnecessary information, especially even with dividends yesterday, right? You need to identify which information is needed and which is not. They will give you almost 20 lines of question. They can give if they want. But you don't have to get scared. The moment you see big question, don't freak out. Just read word by word, break it down, analyze what is needed for me and what is not needed for me. How will you understand what is needed and what is not needed? By solving multiple questions, and goes without saying your provisions have to be clear. In the previous question, we spoke about managing director, if any. That if any mattered a lot. You have to get signatures from two directors, and one of them should be managing director. Only if there is any managing director appointed. The two words after managing director, open that provision. If you see after managing director, there are two words, if any. What do you mean by if any? If you have appointed any managing director, then the signature of MD is needed. Otherwise, signature of MD is not needed. Two ordinary director signature is sufficient. Clear? And in the same sentence, before managing director, they have used the word shall be. Shall be signed. What is the nature of that shall be? It is mandatory provision. They are not saying maybe. It is mandatory to be signed by managing director when you have appointed a managing director. So each and every word matters. Now this question, whatever we have given, I have given, it is totally and totally relying upon shall be and if any. Clear? So focus on these things. Whenever you are studying at home, underline these lines. If you want for clarity's sake, whenever there is shall be, just circle it and write mandatory. So that next time when you open that, quickly you can revise. Now tell me, and now we studied 134 in the 2-3 times we studied right now. If you have to revise this provision, how much time maximum it will take? 3 to 4 minutes. Even if you are doing it from textbook, that's it. Stick to one material. Now immediately, we'll do this exercise right now. That provision is open, no? That provision is open or open 130. Open 130. Everyone open? Okay. Start revising 130 and tell me within how many minutes you're finishing. Just start revising 130. Tell me once you're done. Yeah. Each and every one of you, once you are done, just let me know. Done? Huh? Done? None. None. Yes or no? I'm asking her. See, on an average, how much time did we take? Okay, fine. Let's say you are having a rush to complete it right now. 2.5 minutes. Max 2.5 minutes. Let's say we are taking 5 minutes. Let's say you're revising it twice. 5 minutes, is it a lot for an important provision like 130? No. And going forward, the time will keep reducing. So you don't have to worry and you will not need revision notes. You will not need revision notes. You will not need summary notes. You will not need any of your marathons or nothing. Focus on your self study. Remember one thing, 30 to 40% is only in the class. Your 70% of your preparation is your self study. Never ever forget this. But for that 70% to happen, well, this 30% is needed. So attend class, go home and keep revising. Do not think that answer to your exams is your classes. No. Answer to you passing your exam is not your marathons, it's not your revision notes, it's not your chart books. They might look attractive. I am telling you, whenever any institute, I'm telling literally any institute, if they are giving study material, especially revision notes, it is just to give some value to students. Think about it. Not just any institute, for a matter of fact, even the big institutes you can think of. I will not name them. They are giving you revision notes, but they know that revision notes are not sufficient. They know that, and they know that textbook is more than enough. But they just want to give you more value. It's just one of the things that a business does to survive, and there's nothing wrong in it. But you guys have to be smarter than that. Do not rely on that. I'm telling you, we still have time. Stop relying on these revision notes, marathons. Those are anyways last option that is there available online. When it comes to that point of time, there is no other option. You have to do that. When you haven't touched your textbook all these months, suddenly in December you open textbook, nothing will go inside your head. I can tell you. There at that point of time, some of you should give exam, and what will help you? Marathon and revision notes. But someone who has been studying from day one, the best thing that will help is your textbook. The more and more you get familiar with it, and you will be able to remember. Clear? Okay, so we'll continue tomorrow. I'll start from 139, and tomorrow I'll tell you whether Jainagar students are coming to Malleshwaram or you guys are coming here, or Malaysian students are coming here. Okay. Even if it is there, it will be only tomorrow. I'll let you know. I'll text by tonight. Bye guys. See you.